Okay. Um. Hello, everyone, and especially those of you or you in particular that is watching this video. My name is Olo Cyril, and in this video, I'm going to be explaining some vital parts you need to know, which are part of the basics of trading. After you register in either with Deriv or binary.com, and you're able to create your MT5 account and able to log in and doing some minor setups. Please, if you are a novice and maybe you've not created your account or you've not even um, involved yourself in any kind of trading before, I advise you get back to me so that I can give you the guideline on how to create your account, and also how to create and how to sign in and probably get everything set before you start trading it. Now, when you come into trading, or if you are new to trading, or if you have been trading before, we all know that price doesn't stay in a particular direction. And in the market, there are two major um, forces which we consider as the sellers and the buyers. In other words, they call them the bear and the bull. The bears are the sellers, while the bull are the buyers. So when you come across these terms, don't get confused. It's still the same thing. And for those of you who have been trading before, but you are just trading blindly, maybe yours is to go to YouTube, download different strategy from there, apply them, and maybe in couple of days you made little profit, or at the end of the day, or in 2 seconds, you blow off your account, including the profit you made initially. These are the reasons why we need to start from the scratch this time around, or I need to explain to you what you have been doing that is not correct and how you can change that attitude. Buying indicators, paying for signals, they are good but not enough, because it's of no use when you are doing all this, looking for strategy here and there, paying for both, and then you are not familiar and you don't even have that self confidence to tell somebody I can trade. That is quite obvious. It is it's as if you are risking your money. In fact, you are risking your money, not it's as if. So we are going to start from the scratch. When you look at the screen right here, you see different movement up and down. This is mainly on synthetic index, but what I'm teaching you is applicable to any trading platform, be it cryptocurrency, um, currency pairs such as the major currency pairs such as Euro USD and others, volatility or synthetic index where we have the boom and crash on binary. What you have been doing that is not correct is one, you are not doing what is needed, which is getting to know where the market is going to, or where the price is going to. Where will the price likely get to, and how soon will the price be rejected? Price move in three different directions. The first one is uptrend, which is also known as the bullish movement. We have downtrend, which is also known as the bearish movement. Then we have sideways movement, which is called consolidation. In the uptrend, buyers are always in charge. That means the bulls are always in charge. You see the price will be going high, creating higher high. But in the case of downtrend, the bears are in charge. That means the sellers are in charge, which means the sellers are dominating the market at that moment. But you and I, we are always looking for opportunity to trade in accordance to the trend. That means we want to trade when we notice an uptrend and trade or enter a trade when we notice a downtrend. There are some factors that you need to put together for you to know when to go in and when to come out. The first factors the first factor is technical analysis. As a beginner or as somebody who has been in trading, you ought to know about technical analysis. After technical analysis, then the next one is the fundamental analysis. What is technical analysis? Technical analysis is the act of identifying the movement of the price. That means you to be able to tell, okay, currently this price is on a high or on an uptrend, or this price is on a downtrend or sideways. So when you notice the movement upward, the next question that comes in is, where will this price likely get to? Because it is not always moving straight forward. That is where the whole thing gets complicated. Price is not always going straight, either downward or upward. Yeah, sometimes it's reverse, go back. The movement is not something you can just stand from a distance and tell so easily. That is why you need to do technical analysis. So after that, you'll be able to decide when to enter, which comes about a fundamental analysis. Fundamental analysis is after you notice or you're able to mark out the points where market or price may likely get to, and when they are getting back where they might stop. So, and from all these infos you have been able to gather from your technical work, your analysis work, you will now decide, okay, at this point I will want to join, either to buy or to sell. Then I'm expecting to take profit at so level. So that is how these two major things comes together. That is when price action comes in. Because when you talk about technical analysis and price action, this word scares so many beginners. Though some people have used some terminologies to make it look so complicating. But nevertheless, we are going to start from the base. And the first thing we are going to be talking about is not, I'm not here to tell you the names of the candles. The names of the candles doesn't matter at the moment. Though when you have the knowledge and you can interpret and you can tell the types of candles, it will only give you an edge, but not a strategy. It will only give you an edge in trading, not a strategy. So that is why some people get themselves so addicted to memorizing all the names of the candles, and when they open their chart, they start uh, trying to trade based on the names, and they forgot that all they read is just the textbook format. When you come to a live chart, you hardly even recognize some of those candles patterns you think you have learnt initially, because it will be confusing. You can't really tell if this is a hanging man or an inverted hammer or whatsoever. So the first thing you need to know as a beginner is what we call BMS. BMS in trading simply means break in market structure. Break in market structure. This is a point whereby market gives you lower low or higher high. When a price is giving you higher high, at that moment, there is what we call BMS or BOS, break of structure. So when you're able to identify break of structure, from there you'll be able to understand some other aspects such as support and resistance, supply and demand, retracement, pullback, or retest, whichever one you have read before, which I'm going to be showing you right away. This explanation on BMS is going to be on series. I can't explain everything in this particular video. So try as much as possible to watch the next one where you'll be able to get more or additional information about BMS. Now, I'm going to be using this chart to illustrate what market structure is or what break in market structure is all about and how you can leverage on that and make massive profit from the market aside using both or indicators. Okay, let's go in. All right, let me just start from here. When you look at this chart, if you are a new person and you're trading based on color or whatever, you will lose because you can't really tell what is happening. And there are so many things happening behind that it only take those who have been long in trading to interpret. When we say BMS or BOS, it simply means when price exchange. And let's say, for instance, when you look at this movement, when you take a good look at this movement, I'm talking about this very movement. You can see there are a series of red candles. That is a downtrend coming down. But on the long run, it gets to this point. Something else happened, right? Initially, I told you that market is of different, sorry, price move in different points. I think it's an opportunity to explain that to you. This part is what we call downtrend. You can see it, everything was sloppy. And here, this part is what we call consolidation or ranging market because the market is not, it's not that it's not going up, neither is it coming down. It's not creating higher high, neither is it creating lower low. So that moment, as a trader, you wait for market to give you the next move because at this point that this market is consolidating, where the candles are just lining up one after the other. Sorry, is a time of indecision in the market. It shows that buyers are neither in charge nor sellers are in charge. So at this point, when you notice that move as a trader, you wait because it can either break up or break down. But in this case, it broke down, meaning it continued its movement. Right? Good. But when you get to this point here, this market started going up again. and that one is referred to as bullish movement or uptrend. So now you can see from only this point, you're able to mark out the three movements now that you're likely to see on your charts in any currency pair. We have the up, down, and the side movement. So that is that on that aspect. Back to what I want to uh, discuss with you on this particular uh, video is BOS, that means, or BMS, is breaking market structure, because that is where you need to understand when to enter and when to exit. When price got to this point, after it broke out, it rallied down to this point here. What happened at that point? Market or price was able to get a support. That is where support and resistance comes in. Price was able to get support at that level, and buyers emerged in and took the lead and pushed off the sellers away from the market. But where did that movement start from? It is at this point where it broke out. That is where the movement started from. And at the tail end, it was able to gain support. So immediately after that, the market faced up. So here we can now say from this point, market has broken structure because it is no longer downtrend. It is now uptrend. That is one. That is how we understand what we call POS. But we are not stopping there. Let's go further to see other things I'll need to explain to you. Good. At this point, the market was coming down from. This was a sell downtrend movement. Later on, it moved, but the market price later moved higher, and this was um candle. Sorry, this was the point where market moved higher, and at this point, you went higher than where it even started from. So for a little period, market broke structure, but later it bounced back, which is this bearish movement. This first place that I cycled, talking about this point here, market gained support there, and at the top that it was unable to go further, there was a resistance, meaning that price couldn't go beyond that level, so it has to make retracement or pullback down before it goes. So that is how we understand what we call the support zone and the resistance zone, the S and R, right? Okay. So now you should know what support zone means. Support zone is that point where price was, after moving from an uptrend, it gets a particular level, it was able to gain support, not going deeper, rather it went higher. That is one. And secondly, in trading, this point whereby this bullish movement start from, it is usually called the demand zone. So when you hear somebody saying demand zone, it means where the movement of uptrend starts from, the origin. This is another origin. In fact, this is the main origin. And where it started falling now, which is this point where there was a resistance, is called the supply. So please, all these things I'm explaining, take your time to understand it. The point where market or price was able to stop and started going up is a support, and also that place is referred as the demand zone. Then the point where price gets to, it couldn't go further, rather it started dropping down. It is called the resistance, and it is also called the supply zone. Now let's go into BOS mainly. You know, in boom, for those of you who have been trading synthetic index before, price usually go down. The default setting is sell, while in crash is what? Buy. I'm looking for a clear example where I can really tell you about BOS. Or we can really discuss about BOS. Now, when you look at this point here, let's discuss BOS in total. When you look at this particular price here, initially at this point, it looked like the price was trying to go up. But when it got to this point here, it couldn't go further, rather it drops down, right? And we told you that that is a supply zone or a resistance zone. Don't forget. On its way coming, you get to this point here, price gains support. It begins to go up. When price gains support, it means it has broken structure. When you check, price has broken structure. And let me prove it to you now that there was a BOS. At this point, when the price was coming down, you notice it broke beyond the former support zone, because here that market started going up. Sorry, this point here that price got to and started going up. Price gained support at that level. But when it was coming down, it, in fact, it broke that specifically. It broke that. It broke down. Can you see it? Price broke that place down. Maybe I should use horizontal line so that I can understand it properly. Okay, now you can see with the help of the horizontal line, you can notice that price broke that support level, and price got to this level and got another support. price was able to get another support to push price to push up. But before then, the first place where price broke the support zone down, if you are a trader, this is how you mark your support and resistance level. So let's assume at first we were not around. We just open our chart and we notice this movement, this bearish movement coming down, this very one. We notice this bearish movement coming down. Now, when that price was coming down, you will mark that particular point. What you'll be waiting for is where is price likely going to stop, because immediately there is a BOS, definitely there's going to be a retracement. That means price will definitely come to that place and retest. When it retests, you either go down more or it continue its journey. So you see, when it broke that particular point and it get to the second place where you gain support, price larry back to that place. Immediately you notice it from here that price has gained support, and it has given you some confirmation, because when you check the candle formation there already, that is uh what we call evening star. So for those of you who are still practicing candle, this is where your candle pattern will enable you. But nevertheless, there are some indicators I'm going to set up in the next video that is going to be able to mark out the support and resistance level for you. So as a beginner, you don't need to panic. So immediately price gained support at this point, and it went back to retest where it was coming from. Don't forget, I told you where the price starts from, why it was going up. It is called an origin. It is called demand zone or origin. It gained support at this point, started bullish movement. But here that it started bearish movement is called supply zone or resistance path, resistance area. Because price couldn't go further, that's why it broke the structure. So when you see, well, when you see, so they say there's a break in structure, it means price that was going up initially, it get to a point and it stopped, then it started descending. And on the process of descending, it went deeper than where it even started the initial movement. So this is what happened in this axis here. So price really, after it gains support at this moment, some people will be waiting, okay, since this thing has broken structure, definitely to go back to retest or to do pullback. So they will be waiting for when the price will give them a sign of pullback. That means to go for that, because definitely at any point where market broke structure, majorly in high time frame, it must definitely do pullback, either to continue the downtrend or uptrend or to change a new pattern. So this is what we are going to be leveraging on. We'll wait for when markets break a structure in higher time frame, then we'll be waiting for a reversal. So on that reversal, definitely we we have a high probability, a chance of entering the market, and we know definitely that for this market to change hands, it must get to the initial support zone, which will now serve as resistance. So there are some instances support becomes resistance level, because at this point, when the price broke that part, it was coming down, but it get to this level down here, it gained support and it started going up again. Price started going up. So definitely, if you're a trader, when you see price going up, you should know that it's definitely coming to retest. So that is why you mark with your horizontal line. You mark with your horizontal line. Immediately broke it. I see it moving up. One thing is, you either follow it to go and retest the initial place, the initial support zone, which is this point here. Talking about which is this part here. This is the initial support zone that price broke, because when price get there, it's going to react. So definitely price must get to what's happening, except there is another resistance line before there, that point. So, but nevertheless, all these things is going to play on your chart. It's going to play on your chart. It's not something that you have to stress yourself and be looking for them. So you buy and you take your profit before it even gets to that point. You see again when it get there, to show you that it reacted, it started giving you a bearish movement, which is this one here. But nevertheless, it couldn't go far. It gained support again, telling you bullish. The bulls want to really make sure that they push price higher. They never gave chances for the bears. So the price shoot up and it get create a higher high, which was higher than the previous high. You see that currently the price broke the initial high, which is this place. This was the high, the higher high where there was where there was a resistance level. So the price broke it up, and after it broke it up, it started coming down again. Price started coming down. At this point, when price got to this level, sorry, when price got to this level, there was a resistance line. That is why it's giving you shooting star, reversal candle. And it came back to the exact place, almost to the place it was it retested, which is this axis, this place. You see it. So when it is coming down, definitely its price will get there. It tried to go up, but there was no much momentum. Rather, it broke it and come back to the base. Can you see it now? So this type of support level is called the horizontal support level, where there will be price will be gaining support almost at the same line. In fact, this one is the same line. This is horizontal support level, but you don't need all that. So now, what I want you to get in this particular explanation is that when you notice a break in structure, and don't forget I told you that when price is moving up and it gets to a particular point and it changes direction downward and give you a dip or high than the previous point it started from, than where it started from initially, definitely there is a break in structure. So when there's a break in structure, one thing is certain, there must be a retest. There must be a retest. So that retest or pullback is what we are going to be leveraging on synthetic index. It's happening in all currency. So when you're able to mark a support zone and your resistance zone, you'll be able to enter market with at least 95% confidence, because you've already know where the market is going and where it's coming from. If price doesn't hit a support or a resistance level, it doesn't change direction easily. That is another secret you should know today. Price doesn't change direction so easily. But all these things, if you want to get it properly, you don't do it in lower time frame. You go to higher time frame, such as 1 day, 4 hours, or 1 hour. You wait for a break in structure in 1 day. Then you mark probably where is this market going to reverse, when is it going to do pullback to. Because when I set up those indicators in the next video, it's going to tell you each point where price may likely come back to. So you mark those places down and you will be certain that there is no any other resistance level before that place, or there is no any other um, resistance before that particular point. So when you are entering the market, after I give you all that setup, you will know that okay, market will definitely get to this point before it react. Then you enter, then you take your profit before it even get to that point. This is what you are going to be leveraging on. This didn't work. In fact, 95%. It's all require patience. You don't have to stress yourself. Don't jump into trades that you are not certain of where it's going and when it's going to end. So that is the secret I'm going to share with you guys uh soon. So let's quickly do a recap and check where price broke structure so that it should not look like maybe it's only this part. There are series of BOS in the market because at that moment there's forces fighting each other. The buyers want to be in charge, the sellers want to be in charge. So when the sellers manage to get momentum, push price down, they'll get to a point buyers will be waiting for them and they will decide to take the power from them again to push price up. So these things are not manipulated. If you are able to follow them when they are doing all this war, then you'll be able to get good result from the market. Let's move to another point where we get a good resistance level. Okay, let's go to another pair rather. Maybe since this is on boom, let's go to crash. Let's go to crash 1000. To tell you that price break structure often and often in lower time frame, but in higher time frame, it is very, very uh rare. So that's why when it breaks structure and you're able to leverage on a higher time frame structure, you enjoy your trade. Once you break structure, higher time frame, then you come down to lower time frame to place your trade. So that is the strategy that works best. It works with price action. So and it gives you more edge above other traders who are just uh putting their entries and exits based on indicator alone. Okay, this is crash 1000. So let's quickly rather see how the structure work also here. You know, in crash, the default setting is buy. That means anytime, any day, once you please buy, start moving up. But it will only react when it gets to maybe a certain level and the price has to go down deeper. That is when you see all these spikes, these red candles, they are spikes. But nevertheless, when you understand this, be it red or green, you know what the market is talking about. Okay, now looking at the chart, okay, let me just give you a quick one so that we won't delay. I don't want this video to be too long. You notice at this point, price tries to go up after gaining support, but it couldn't go far. And before you know it, it created a new supply zone, meaning at this particular point here, there's a resistance level that did not allow price to go up. So price was rejected. Immediately price got to that point. That's why it created a new sell, a new supply zone came down. But on its way down, it gained what we call support here. So as a trader, we say since there is a BOS at this point, because looking at this, you know that there is a break of structure here, and there is also a break of structure here, which results to the downtrend. In fact, let's discuss the first one. There was a break of structure. This green candle was the pullback, but it couldn't go far because there was no much momentum. Price fall down. So we tried to retest, couldn't, still went deeper. But when it got to this level where there was a support, price have to go back and retest the place it broke. It go back direct to the supply zone. Immediately you retested it, started going down, started going down, and you see it went down. It was unable to come up. It was unable to go above this level. It was able to go above this level. So see, it was all down, down. So at this point, it was able to manage. So when you are able to mark your support and resistance level properly, it will help you a lot in trading. Yeah, it will help you a lot in trading. So as a trader, let's say for instance you marked here, oh, there was a POS. Yeah, sorry, there was a POS break of structure at this point. As the overall, there was also a break of structure there. Really, you notice it, you say, okay, since there's a break of structure, I know price will definitely want to come back and retest. So you see, it retests where it retests under the count, your what is it called, the first horizontal line. Boom, immediately retest it. It came down, it gained support again, went back to retest it for the second time, and before you know, price started pushing all the way down. So in the next video, we're going to use some indicators to be a little lively than this, and maybe to be open your eyes. Then we'll also discuss how to mark it from a higher time frame. Then we place trade on a lower time frame. If you go through it once again, you'll be able to get one or two things from this video. Jot them down so that you'll be able to build your trading pattern or strategy from there. Thanks.